Hello, good afternoon. It's Saturday today. 3 p.m. is always our time to exchange the knowledge we have for you. And, at this time of the year, a lot of times our business owners really wondering what way to get their payment to themselves recognized. For example, you may running a company and the company shows a profit, and you know that throughout the year you took $50,000 company money into your personal account. Now it is a time the business owner goes, should I recognize that 50,000 as a W-2 income, or maybe I just recognize that income as a 1099? Am I okay to get to 1099? Am I okay to just get distribution or dividend distribution and to recognize that money indeed is in my personal account? So this webinar is meant to cover that and meant to address, um, you know, the points that related to this issue. What's the drawback? And is it possible to do that? So let's go through this very important issues that related to every small business owners. Before I start sharing screen, I do want you to understand that we have other webinars that talk about W-2 and the 1099 difference, but those are from the different angle we talk about that. For example, one of the webinar in our system, we simply talk about the tax differences if you get a W-2. So what do you do? If you get 1099, what do you do? But today's webinar is really about a business owner, a small business owner throughout the year did not do anything with their own pay, but they know that on the book it shows they took $50,000 from the company, from their business to their personal account. And at the end of the year, at this time, before January the 15th of 2024, they're asking for 2023, my $50,000, should that be a payroll or should that be a 1099 NEC or shouldn't that be a K1 from my LLC or K1 from S Corp or even just a dividend payment? Which way and how do I do it? And that is what we're meant to cover today. So let me share my screen at this point. We will simply go through what we have here. I want to lead you to our website first. This is our website, folks. Obviously, everything is coming into here. If you want to consult with Community CPA, you would come to appointment button right on the top here. And if you click the button, you will have our partners listed and you can click any one of these partners to make sure that the area of expertise it is lined up with your question. And of course, you can always select me. I am the CEO, managing partner at Community CPA. And I promoted myself all the way through. Okay, we started the company back in 1998, one client and myself. And over the past 20 some years, obviously we grow, and so we have all of these capable partners, and they're as good as me, and we each chairs different sectors of the understanding, so you can definitely utilize us. This is one of the area I want to lead you to. The other one is our YouTube channel. Do you know we have a YouTube channel? Do you know everything I talk about today is going to be deposited here later? And we actually put in, like today's talk on Monday, it will be showing up right here, and you will see what we have on our talking topic. A lot of times our topics is really reflected what people are needing to know, because we don't come up with webinar topics just sitting here. We hear clients' voices, and for example, this particular webinar we are doing right now, it is absolutely a question. If we don't get it daily, we get it every week from different business owners. When they come through to do tax planning with us, that would be something they ask. Okay, we look at their accounting records and recognize that they took some money to their personal account. And the reality is it's already spent. You cannot say that, okay, return it back to the company so we don't treat that as your income. The fact is that it's already gone. And with that to be the case, then what do you do? And how do you decide? And there's so many choices. And so we are going to focus on that today. So let me bring up my PowerPoint with you folks. And this is our topic, W-2 and 1099 NEC, which one is better for me? This is from small business owner standpoint. All right. So it is not something, it is definitely not from other people's standpoint. We're just talking about the business owners who are actually needing to know how to treat the money they already took from the company. I kind of gone through that already. I am the CEO and the managing partner for Community CPA. And we, in our firm, one of the characteristic we have in our firm, which I am very proud of, is the diversity inside of our professional staff. Collectively, we speak 10 different languages. Obviously, we all speak English, but we speak another language. And we have more than 10,000 clients. And I have served on the Federal Advisory Committee to IRS in the past. And I wrote 2 books so far. The first one was published in 2019. And the second one is published this last year, actually. I keep on saying this year. Last year, in 2023, May of last year, I published the second one, and I am working on the third book, is Appointment with Ying at 2 p.m. The third book will outline how to expand your business beyond your personal capability. The first book is to start at 8 a.m. The second book is to grow your business at 10 a.m. The 2 p.m. is to elevate. It is to expand your business into another level beyond yourself, beyond your own capability. And that is the book I'm writing. In fact, every time I write this book, it really signifies the process that Community CPA is going through. So it is not isolated with just a fictionary story. It is my client's stories combining with our own. So if we are successful, our book will be a good guidance for anyone who wants to be successful in the business journey. And with that said, one reminder, which is necessary, whatever you learn on the internet and whatever you learn today with me, and it is really important that you apply that carefully. And if you certainly want a third-party opinion, which I end my webinar by saying that you really do need to rely on third-party opinion when you are in the crossroad, when you're not sure whether you are doing this right or wrong, and that's the way to do it, to rely on third party. But when you rely on third party, that doesn't mean that you go on internet and grab some slides here. No, you need to actually consulting your situation specifically with the professional. So that way you will be okay, and you will run your business with a solid backbone, knowing that there's a support for you. And we are really the support for that many, more than 10,000 businesses in United States. So you can certainly rely on us. With that said, and let's talk about business owners year end. I already kind of said that John Smith took 50,000 from his business checking account over year 2023, and he actually took the 50,000 already, and he already spent it. And now we are coming into the year end with taxes, with all these W-2 issuing due date, 1099 issuing due date, and John comes in, goes, Ying, what do we do? And I have an S corp. So let's assume John has an S corp, and so he is like, I already used up $50,000 out of my business. Is this gonna be my W-2? Or it is going, I should issue myself a 1099 NEC, or maybe it is just a distribution. So folks, let me tell you that obviously you have the following choices. The 50,000 you took from your business. Number one, which I did not cover here because it's so straightforward, you should know that. Number one is a reimbursement of your personal expenses, right? So if you have spent your personal money for your business should reimburse you right now, right away, so you can account that into 2023 expenses. So that one, we're going to leave it out because you know that to separate your business from your personal doing very well. And if you spend company money for your personal purposes, you should reimburse the company. You should write a check, give that check back to the company, say, hey, that is the money I should not take. And I used company funds to buy personal stuff. Vice versa. If you bought stuff for the company, but the company did not reimburse you, I hope you have a little envelope saved at the end of the year and writing yourself a total. Maybe that is the $50,000 you took, and maybe not. Whatever case, and you need to reimburse yourself so the business would have that as business expense, right? Of course, you need to classify them into different expense category. Could be office supplies, could be whatever, rent, and you want to classify them properly. So you got that squared away. But what we are talking about here is not reimbursement situation. The situation is that the business made money, you took $50,000. So if you are running an S corporation, is that a W-2 or is that 1099? So with S corporation, if you work in the S corporation, you should have a W-2. Not only a W-2, the W-2 need to be a reasonable pay. Is $50,000 W-2, is it a reasonable pay for what you are doing? What are you doing in your company? Are you a custodian cleaning your company, or you are the CEO of the company that making the shot, right? So there is a reference at Department of Labor called prevailing wages. And you can go on to Department of Labor's website to look in your geographical area and what is the pay grade for your type of situation. For example, if a lawyer has an S corporation, and then if you search for Midwest of lawyers pay, and that pay is running from 60,000 to 200,000, there is a range. So you can decide on the range, but the reasonable pay as a W-2 should be there because you work in the company. So maybe your 50,000 should be a W-2. But it is also possible that the company is yours, but it is running by people, not you. And you are just doing something that's not even related to the company. You took the 50,000, then you may qualify for being a 1099 NEC. NEC stands for unemployment compensation, right? So it's not employee, you are compensated like a contractor. So in a business, this is something that I want to remind folks. Let's say you are in the construction business, you're specialized in drywalling, okay? Just put on sheetrocks and you put on drywall. And if you are in that business, folks, and you are the CEO of that business, you're also doing the drywalling yourself as well with your worker. All of your employee, including you, should be on W-2 because that is your profession. That is your line of business. But of course, if you have a custodian and a cleaning person who does regular cleaning for you as well, but they're not drywaller, they're just cleaning person. That cleaning person can be on 1099 because it's not your main business. It's not your main business. Make sense? So when you are running, like community CPA is a CPA firm. So we run on accounting, tax, and things like that, right? So people who does accounting, who does taxes, they cannot be on 1099. They are employees of community CPA. So I want to bring that out because it is not like you can just say, oh, I had this person has social security number and he does work for our company, at home. Okay, so it should be I treat that as 1099. No, you want to look at your main business. What do you do in main business? But what if community CPA has a custodians who cleans our office? A W-2 or is that person a 1099? In this case, that person can be 1099. And it is also can be W-2 if you want it to be, and if there's a reason to be, but to be a 1099 is not wrong by IRS standards because your line of business is not related to cleaning. But if you have a cleaning company and you're running cleaning commercial property, private properties, and your cleaners, they are your employees. So with that said, so if you run a S corporation and you got your 50,000, so number one question is that whether you are working in the company or not, and whether what you do is related to what company doing or not. And so you can decide on W-2 and 1099. And in some cases, the owner, John Smith, owns the S corporation, but he just doesn't do anything in the S corporation. He doesn't get paid because he doesn't really do anything. He's just like owning the company. So because he owns the company, so he has this distribution. The K1 comes out, right? So this is your consideration, business owner, at the end of the year. If you're S corporation, you need to decide the money you took is W-2 or is 1099 or is a distribution, or of course, we eliminated one possibility, that is your reimbursement. We're just not gonna even bother with that because that is applies to all situations. You should get reimbursed to begin with. So that reimbursement needs to be done. Then we talk about how you're gonna treat this $50,000 that you already took. And obviously you want that to be deducted from your business. If it is W-2 or 1099, it's become a business expense, right? But if it is distribution, it's not a business expense. It is simply what we call the balance sheet entry. So it is you take the money, be distributed to yourself, and so you pay taxes on the K1. What about your running LLC? So if you're running LLC, similar things, you want to determine whether you need to get a W-2 or if you are a 1099 NEC, non-employment compensation amount. And you also get a distribution, but LLC distribution is a little tricky. So in LLC, if you work at LLC, you think you should get W-2. You don't have to issue a W-2 for yourself. You can actually distribute the 50,000 to yourself and you pay self-employment tax on your 1040. So it is not the same as issue W-2 because that is your expenses for the LLC, but you can actually bring that 50,000 via distribution to your 1040 where you treated that almost like a W-2 because you are still paying Social Security, Medicare. They also call the self-employment tax. So you'll pay that when you are doing your 1040. Okay. With that said, what if you are a shareholder of a C Corp? Okay. And you took $50,000. That you need to decide whether you were working for the C corporation or not. If you did, and you will pay yourself W-2, run your W-2. If you didn't, or if you did something that's not your main course of business, but it is something you would otherwise hire a subcontractor to do, and you did it, and you can issue yourself a 1099 NEC, and you can also wait for the C corporation got their taxes done, and then you distribute dividend to yourself. That dividend distribution is also a income coming to your 1040, but it is an income that you would pay dividend tax. Dividend tax is not the same as income tax. It's also not the same as a capital gain tax. The rate itself similar to capital gain tax, but dividend tax is taxed separately to the dividend that you distributed. And also it really depends on what type of dividend you got, qualified, non-qualified. So there is other things that you need to know. But dividend taxes doesn't have the self-employment tax component to it. So you will just pay taxes when it come out. So there are folks talking about C corporation. They're saying double taxation. The reality is that if you pay taxes at the corporation level, then you pay taxes again as a dividend tax, and that could trigger you to pay taxes twice on the same amount. But double taxation is not necessarily a more expensive options compared to people who are doing S Corp. So at a certain level of S Corp, you are paying more taxes than you pay the double taxes. So I just leave that with a thought. And if you have such a big question mark related to certain comments I made, you just come up and go to our website, book our time, and we'll come around and explain that to you in more details. All right, so business owners considerations, right? So, okay, now you just told us a whole bunch of things. I can do W-2, I can do 1099, and you also talked about dividend distribution, the distribution of LLC, distribution of S Corp. So what is my thought, and how do I weigh in those things and to know which one is good one, which one maybe not so good? So let me list out a couple of things as a business owner you must have. You must consider these ones. If you are saying that, well, Ying, I don't know how to consider these ones, I'm getting really twisted around and it feels like really lost, then that is the signal you need a third-party help, okay? So the business owner consideration related to W-2 and 1099, one of the things is the bottom line differences. As a business owner, what is your bottom line? Your bottom line is generally a consolidated bottom line between your business and your personal, right? It is your business. So whatever happens to you and your business, you consolidate that together to consider. The bottom line means that as a combined consideration, I am paying less taxes. That should be your number one consideration. And what type of insurances cost would there be if I choose W-2 versus 1099? Absolutely. That is the second consideration. It's such a big second consideration because if you are if you issue yourself a W-2, you're calculated to the workers' compensation and, annually, right? So when they do workers' compensation, they know what position you are doing, and then they will give you a rate, and then you pay workers' compensation. What if you are a, high-end clerk and you pick up the box and you break your back? Workers' compensation comes in to pay you. So that cost is a consideration. And other cost, health insurance cost, and unemployment insurance cost, all of these related to the employee's right for, from the company that need to be considered. If you issue W-2 for yourself, there are things that you will have, and you will be able to calculate, is that better off or not? If I am this way or that way? And sometimes the answer is different, just depends on your personal situation. And a good example would be, and one of the taxpayer, and he has a C corporation, and he works in in his company, and he used to be a delivery company driver, and then got into the car accident and a paralyzed, waist down, so he cannot really drive anymore, and he has a disability payment from the job that he did. and he started up his own business, but that business only requires his brain and his hand. So the disability doesn't really impact what he can do right now in the business. So in the business, when he does it, if he issue himself a W-2 and as a payment, then maybe that will jeopardize whatever the disability payment that he is getting from the other company. But if he is just earning dividends, if he is just doing something that can help to run the business, then he's not in the workforce. He's actually getting the payment, but it's a passive payment, right? So those are the things you consider, because when you have a flexibility to either receive one payment or the other, and you want to look around your own surrounding, make that decision. What kind of IRS comments would come through if you were choosing a different payment? IRS has this unemployment uh, benefit insurance. You pay for it. So once you lose your job and you can get unemployment insurance, and the state workforce is working with IRS on future tax, so offer you that package where you will get, right? So if you lost your job, if your S corporation folded and you don't have any more W-2 payment, you can go to the state to apply for unemployment insurance. So those are the things you consider. Does this type of business sector allow certain form of income? For example, like what we talked about earlier, and this person in the C corporation, he can get paid how many ways? He can reimburse himself, and he can pay W-2, he can pay 1099, he can pay 1099 NEC, and he can also pay 1099 DIV. So in your particular business sector, what is allowed? For example, you can't do 1099 DIV when you are a LLC or S Corp, right? So you want to understand that in your own sector, what is allowed. For example, you are running a nail shop. You know, the nail shop, the where you paint your nails. If you're running a business like that, and in certain state, there is a different treatment for the nail technicians. Like in the state of Florida, for example, these nails technicians are actually 1099 NEC recipient. The state only require you to have a employee who is the manager of the store or cashier of the store or the owner of the store. So the rest of the people, they can all go on 1099. So you need to know in your business sector whether the 1099 is even allowed. So you may say that I own a restaurant, I'm the chef, so I'm going to pay myself 1099. No, you can't, because in the restaurant is regulated by both federal and state to be an employee of the company. So look at your business, then decide what is allowed, what is not allowed. What is the timeline for filing? That's also important. Like say we're in December and you are just puzzling over this $50,000. And how long do you have to make that decision? If you want to pay yourself W-2 on that 50,000, you have up to January the 15th, 2024 to make the decision for 2023. But if you decided that is your 1099, then you have up to January the 31st of 2024 to make that decision. So each form we're talking about carries different due date. So you want to know, okay, today is January the 14th. Do I missed certain deadline? You almost missed January the 15th deadline, so you can still do W-2. You're not late yet. Is there a need for retirement contribution to the owner? That is a big consideration as well. If you are a business owner, made money, and you don't do W-2 for yourself, and then I guess you may lose, you can literally set up a 401k solo, putting away $30,000 without paying income taxes, but you lost that opportunity. So having a W-2 have a certain defined, certain well defined benefit for it. So if you don't do it, you don't have those benefits. So we will explore more about that when we get through our slides that I prepared for you. So, I want to briefly talk about the subcontractor and the employee W-2 differences. I know I already anecdotally talked about it, but here it is more systematically explained to you. And I just want to really quickly that in your mind, because that is what you need to apply on your own for yourself. Remember, we're talking about John Smith, who is the business owner, and he took $50,000 from the company, spent it. So do you want him to get a 1099 NEC, or you want him to be an employee of his own company, right? So, know that subcontractor, 1099 NEC basically means he's a subcontractor to his business. So that really need to be defined by project. Maybe he was doing one thing, only one thing. So defined by project, and John Smith need to know that if he's getting a 1099 from his own business, he's going to pay taxes on his 1040, right? So employee, if he gets a W-2 from his own business, and there's taxes he doesn't need to worry, like Social Security, Medicare is already been paid by his company, right? A company already taking care of his withholding, so he might even get a refund because he paid his taxes when he was filing 941 return. And the difference, behavior difference. So John Smith, and for his own company, he's not controlled by the company. That makes sense. Financial, he's not controlled by the company. That makes sense. And the type of relationship, is there a written contract between him and the company? And what he does, is that defined as a subcontractor? So just keep in mind what I talked about in terms of business work. The work, whether that is in line with your business, or that is just something the off normal business conduct. Is not exactly what the business does, but as an owner, you do that, then you could qualify for the 1099. So what is the owner's cost to business from the dollar standpoint? So when we talk about business owners, like, remember we said that the bottom line is the dollars, right? So I'm combining the business and my personal tax, and John Smith's going to do the same thing. So he's going to add his business and his own personal 1040 together to see what is the bottom line, right? So if the business owner treats himself and herself as an employee, look at what he's going to spend. If it is $2,000 a month, so the business expense on his business book is $2,250. Okay, so the gross wages, so not just $2,000. Okay, John decided that he's going to pay himself $2,000. $2,000 a month is not exactly what the business is going to pay out. The cash outflow for the business is $2,250, because you have to add the Social Security Medicare match to it, right? The company need to match. Company also need to pay unemployment taxes for federal and state. And if the employee has any benefit, the company also going to pay, right? So what kind of benefit the company can pay for the employee, folks? Retirement match, that company can pay. Medical insurance, company can pay, right? So these are legitimate company's expense for employee. If John Smith is the only employee in the company, he can enjoy all of it, right? And then workers' comp, company gonna pay for workers' comp. So these are that the business owner paying themselves, and they need to consider. Sometimes business owner pay themselves to just enjoy the deferrals on the retirement amount, right? If you're over 50 in 2020, the $50,000 John make, he only need to pay taxes on 20,000, because he is going to put the other 30,000 into 401k deferral. Non-taxable goes to 401k. If business owner treating himself or herself as a 1099, What does that mean? Means that $22,000 is $2,000. So there's no more expenses. It just the business deduct $2,000 and John put $2,000 on his tax return, personal, on his 1040. So this is what the W-2 looks like, folks. And so what John gonna do is he will, on the box 1, you see right here, and if John paying himself 50,000 W-2, he's going to put a 50,000 right there. But if he is going to put away $30,000 into 401k as a self-deferral, that number 1 box is what? Is 20,000. Then box number 3, Social Security and the Medicare. The box number 3, it will be 50,000. Medicare will be 50,000. And under 12D, you will see the 30,000 right here, because that indicates the taxpayer actually moved 20,000 as a business expense, okay? Business expense to his 401k, because it's non-taxable, it's deferred, it's tax deferred. It won't come out to pay taxes until John take it out when he needs it. This is 1099 NEC for 2023. And you can see the box, that will be the $2,000 right there. John will be putting in, the whole year will be 50,000. So John will put in 50,000 right here. The company deduct 50. He put the 50 under his personal paying taxes and the Social Security, Medicare, and the company match on his 1040. So you can see that you can have a company pays for it, become company expense. Then you can also pay that yourself on your 1040. So for John, he owns the company 100%. So what he cares is the consolidated result. Is that really good to do it which way? That takes calculation, because everybody is different. If you have other income, it make the picture different. So this is a determination every successful small business owners would do at the end of the year. Decide to issue W-2 at the last minute. So John Smith decided, I am going to do a W-2, $50,000. Decided to issue W-2 at the last minute. The due date is January the 15th, 2024 for 2023 W-2. I didn't do W-2 I didn't do payroll the whole year. Now is the end of the year. I realized, John realized he took $50,000. Now it is W-2. We decided, okay, W-2. Then what do you do as a business owner? If you are at this last minute and January the 14th, you still have time to make that 50,000 as a W-2. So you want to determine the gross amount. You want to run all your 50,000 into the last quarter of 2023, submit payroll tax 941 and the withholding on January the 15th, which including employee, employer. So yours, John's, and John's companies combine the Social Security and the Medicare and the income tax withholding and other benefit deduction. Maybe John will have a 401k solo plan, and we will put away that 30,000. Yes, it is not late. You can still do. Okay. And then of course, at the end of the January, don't forget to file the report for 941, and don't forget to file a report for 940, to file future tax, unemployment, federal unemployment, and then you have a state unemployment that's also due at the end of January. So we're still in the time where we can do W-2 for you. If you just paid yourself 50,000 and you haven't really decided what to do. So you may say that why people would care to do W-2 right now for 2023, because there are benefits. There are benefits. Number one, it reduces your company profit. Number two, you can put away 30,000 into your retirement plan. Or if you have other benefit in your company, for example, paying medical benefits, and you can come out of W-2 as well. So there's so many things that W-2 is doing. W-2 also give you the right to claim unemployment insurance when your company falls or when you fired yourself from your corporation. So there's many things why W-2 is needed. And W-2 also may be the reason how you're going to get your mortgage made. You think you can get your mortgage to buy your home without a W-2? Very difficult. Okay? There's a reason. You may be sponsoring your parents coming from other country to United States. You think how you're going to prove your income level? By W-2. Right? W-2 is useful. W-2 is necessary in many, many ways. But of course, you want to consider your 1040 situation. If your 1040 is in a special way, I want to say, I'm just imagining, if you have 5 kids and you're W-2 at a certain level, and then you can get child support, and you can get child tax credit and also earned income tax credit calculated as a W-2. That is a straightforward calculation, and the IRS is cool with it. But what if you issue yourself a 1099? It's very debatable, because your 1099 income, going into a different form. So let me show you what they are. So if you got a 1099 from your own company, longer, you can actually decide that until the end of January, and you can issue your 1099 NEC. But be aware, you are responsible for workers' comp yourself, not your company. You need to figure out your own workers' comp. And you also need to know that when you file 1040, you suddenly subject to 15.3% self-employment tax on your 1099 NEC profit. So where is your 1099 NEC goes? It goes on the Part 1 income, and I'm showing you this form. It's a Schedule C. It's a gross receipt, number 1. So you put that total 50,000 in there. And then, of course, the form goes down to give you item to deduct your expense. Those expense deductions are actually very noticeable at IRS, at the state, because you have some small business owners are not very organized with their expense. They're summarizing their expense. Office, well, maybe about $1,200 a year. I'm just gonna budget for $100 a month. That's actually not the way to do it. And if your expenses coming in a round number like that, $5, $10, $50, $100, $1,000, and you're asking to be audited. So your expense needs to be a reflection of the real world. You need to add them up. If you don't use receipt to add your expense, you're asking to be audited. So 1099 NEC, sure, it actually straightforward. You just reduce on your business book, you reduce 50,000. Then on your 1040, you got 50,000. If you don't come up with $50,000 expense, you're gonna pay income tax and also self-employment tax. You will be double taxed right here with a 1099. All right. So is there any other way to not issue W-2 and also not issue 1099 and simply just report, oh, I got paid? John Smith goes, Ying, don't want to do W-2, not good. It's too big of a timeline. I didn't really have my 401k set up yet. Forget about it. And don't want to do 1099 NEC. I have to file Schedule C. No, don't want it. And is there any other way I can get paid not doing these 2 forms? The answer is yes. The answer is yes. If you are a shareholder of a company, you can run officer compensation. Yes. That officer compensation is treated as a self-employment income. So you pay income tax, you pay self-employment tax. It's no different from W-2, except you don't have all the benefit that W-2 you can take. Okay, if you are a member of an LLC, get paid by distribution, that's okay. You don't have to run W-2 or 1099 NEC, and you just simply take the K1 and pay income tax, pay self-employment tax, you know, just like you got W-2. And then you are a shareholder of a S Corp and get paid by distribution. S Corp distribution is a K1 S Corp that you don't subject to self-employment tax. But the thing is, if you work at S Corp and you are just decided that, you know, you're running out of time, so you don't do these, you're just gonna pay K1 income tax. That's a red flag from IRS, knowing that you did not compensate yourself properly. In S Corp, there's a reasonable pay thing going on, right? The IRS knows that if you don't run W-2, if you don't run officer compensation, and you're actually not paying Social Security Medicare. Why is IRS or Social Security Administration so care about Social Security Medicare? Let me tell you why. These are government managed pension plan. When we get older, and imagine you didn't have any of those benefits accumulated, the government still take care of you. In United States, you're not gonna be an older citizen that you are sick and you cannot go to doctor. That doesn't exist. You can go on Medicaid. So government pays for you, right? But you know, you can imagine that if we all go on Medicaid and the government is gonna go bankruptcy. And the government is already almost going bankruptcy anyway. So with that said, the government encourages everybody who works and to put a little bit aside for themselves in the future. So hopefully the government invests your money. So when you are at the age to claim, they still have the funds. So just like right now, for our grandparents or parents, and they enjoy Social Security Administration payment, you know, I have not seen anyone I come across do not have those benefits. Of course, if you don't have a status, that's a different story. I'm talking about people with Social Security and growing up here and have a family here, and we all benefit from that. So it is essential for the government to collect those payments so they can support that program. All right. So I don't see that to be extra burden. I see that to be a path for a better management of the pension program for regular citizens. We're not like President Trump, so we're just gonna live in realities, right? So if you are a shareholder of a C Corp, get paid by dividend income, that is also a way to get away from W-2 and 1099. You know, the dividend income only comes after you pay corporation tax. So if you don't pay yourself W-2 and 1099, and your profit is going to be higher because you didn't pay yourself, right? So your profit is higher, you pay corporation taxes. After that, you can distribute dividend. Yeah, there is other ways to not issue W-2 and 1099. You know, I want to recapture what I said in the very beginning of this webinar. You know, I already ruled out the possibility for you to get reimbursement. That's a normal course of business. You need to know how to do that, right? So if the company owes you money because you spend your personal funds to buy things for the company, you need a company to reimburse you. If the company don't have money to reimburse you, you need the company to owe you. So that need to be on the book. Because one company owe you, next time one company got money, company can pay. Even though John Smith, even though the company is yours, but as an individual, you are a separate entity from the company. So you want to have that arm's length dealing between you and your own company, John. So don't commingle these two because they are not the same. And really, if you don't commingle, if you are proper with separating yourself from your business, then everything else will fall into place. And you will be content in terms of the choices you make and how to compensate yourself. The problem comes when people are just not separating their business from their personal doing. Now, let's dive into these 4 scenarios. So you are a shareholder of the company. You can run officer compensation. So what's the drawback to run officer compensation? I listed a couple of them here, and you will lose the opportunity to provide yourself with the company benefit. When you run officer compensation, you don't have those benefits. Like the one I talked about, 401k deferrals and health insurance payment and things like that. 401k match, I give you an example. And if you have a company matches 3% as you are an employee, and you're not running W-2, then you lose it. You don't get that. You will need to pay Social Security Medicare taxes on your 1040 if you run as an officer compensation. So what happened is officer compensation in 1040 will be subject you to Social Security Medicare. And you'll pay both your portion and the plus the company match. So it's like 15 point some percent. So it's the same. You basically lose the benefit, but you're still doing a W-2. And you'll be paying income tax when you file 1040 because, you know, John took 50,000. If it is W-2, we would already withhold the income tax for him, right? But if he is just going to be doing it as an officer compensation and he hasn't really paid taxes, then he's going to be coming up with taxes on April 15 when he filed his 1040. Because taxes were not paid on a quarterly basis. So when you file taxes, when John files his taxes, he would have to pay penalty and interest related to late estimated tax filing. All right. And because his tax is not paid on a quarterly basis, you'll be generating penalty interest. Yeah, exactly what you need to, what you're going to end up. So someone would say that, oh, Ying, how much is that? It's quite a bit, okay? The penalty interest is calculated from the day one, from the first quarter of 2023, second quarter, third quarter, fourth quarter. So the amount of charges is different. So if you owe $10,000 taxes, let's say 12,000, make it easy. So each quarter is supposed to be 4,000. So these 4,000 were all calculated different. Roughly, you're looking at 15 to 20% of penalty altogether. If you are a S Corp, the IRS regulation require you to run payroll as an employee. Okay? It is a red flag for IRS to see that you are S Corp and you don't have W-2 and you are running officer compensation. So those are drawbacks, you see, on the officer compensation. Then what about if I am a member of LLC, get paid by K1 distribution, what's the drawback? And you lose the opportunity to provide the company benefit to yourself, right? Just the same like the officer compensation. And if you work in the LLC, you still need to pay Social Security, Medicare. When you put that K1 income on your 1040, you don't run away from that, you still pay. You know, unless you are a passive investor, you are not working in the LLC, you're just an investor, then you, of course, can go away from paying self-employment tax, but you still pay income tax. And when you pay income taxes, you still are late. You're still going to pay penalty and interest on late filing. So it is there is a delay on you. Maybe you go like John goes like, yeah, I got the 50,000. And when I run that on K1 to my 1040, man, why do I pay so much taxes? Of course, you pay a lot of taxes. Okay. If you are on LLC, a partner of LLC, and you also can reduce expense, you also can reduce your K1 income with expenses that you spent for the business, but business did not reimburse you. That's a deduction right underneath the Schedule E called the supplemental income and expense that you can put it in. So let's say your K1 is 50,000. John got K1 50,000, but he actually never claimed his mileage that he drove around for the company. So he can claim that under the 1040 Schedule E, reduce the 50,000 down to 45,000 and pay taxes there. So that would be something that you could do. So that is a member of LLC, and if you get paid by distribution. And what about if you are a S Corp and get paid only by distribution? So like John's case, he took 50,000. He's like, no, Ying, don't want to do W-2. Nah, don't want to do 1099 NEC. And officer compensation, I'll forget about it. And I'll just take that in as my K1 distribution. If you work in your business, this may be a trigger for audit. If you work in your business, you're supposed to get you're supposed to get a W-2 payment from your business, and you only issue yourself a K1. Yeah, that is a trigger. That means you do not work in the company, at all. If you just get a K1 distribution and no W-2, that means you do not work there. Okay. And of course, if you don't work there, all the employees benefit you're not entitled to. And when you go to file your 1040, you put in the K1 from S corporation, you don't pay self-employment tax, but you still pay income tax. You could still be paying so much income taxes that IRS assess you for penalty and interest. Okay, drawback. What if you are a shareholder of a C Corp and get paid by dividend income? That means you do not work in the company at all. You are just like buying shares from Tesla, getting paid by dividends, right? You are just a shareholder of the company getting dividend. You are an investor. You'll be paying dividend tax, which is lower than income tax, okay? And because taxes are not paid on a quarterly basis, so you might be paying more taxes at the end because of you got a 50,000 dividend tax, right? So those are relevant points when you consider how to treat that 50,000 you took from the company. And my last point in this whole webinar is that get help, because when you have a third party help and you have a backing for yourself, if you are not sure how to classify a worker or how to classify yourself as a business owner, you own your own business. So how do you classify yourself? And how should you treat that $50,000 income that you took from the business? You can file this SS8 to request the formal official determination from IRS. You can do that. If not, you can ask community CPA for help. So that will be your relevant way to get a good answer, a right way to deal with the money you took from the company. All right, that is all we have today, baby. And this is our website, communitycpa.com. You can email Catherine at communitycpa, and she will let you know. And when we're going to air the things that you cared about. And we are the CPA firm, open 6 days a week. And if you live in Iowa, if you live in the east side of Iowa, if you live in Des Moines or Iowa City, where our branches are, you know how big of a snow we got lately. And we still are open. Today is Saturday, we're open. So we're pretty disciplined and we do hard work and we care about you as a business owner. We want you to make the right choice. A understood right choice. So give us a thumb up and also subscribe to our YouTube channel. That is our benchmark in terms of how well we do, whether we did an okay job or not. So I hope to see you again on Tuesday. On Tuesday, I will talk about how to bid on a construction job, how to calculate your own budget when you have a job come out. As a contractor, as a construction company owner, that will be a useful talk to at least reaffirm or confirm what you're doing is the right thing to do. So I'll see you on Tuesday afternoon at 3 p.m. Central Standard Time. Bye-bye.